Good morning, traders. It is Thursday, February 23rd. We're a half an hour into the open. I promised to do 2 videos per week. This is the first of two. Probably we'll have to do one tomorrow. Right now, we've got the market moving a little bit higher. Before we get started on that, I'm going to do a lot of market analysis on the open so that you can see the process that I go through. I like MOS. That's probably going to be a pick that we're going to be looking at today. It is a post-earnings play. Let's first go into the last stock that I highlighted. A lot of these are going to be longer term swing trades. I believe that the market is going to find support in here. I am not over the top bullish, but I also feel that the rug is not going to get pulled out from underneath us. So I'm starting to position myself on a longer term basis. I'm looking for this choppy market to continue. I am also long futures right now, half position at 40.33. So we'll keep an eye on that as well, and I'll tell you why I like this current setup. You can see here that the market is moving a little bit higher, long green candle right here. So this is a 5-minute chart of the SPY. Let's keep an eye on that. First of all, FSLY. The play here was we wanted to take advantage of the strength that we saw right in here. You'll also notice that we've got our automated trend lines, many breakouts here around this earnings announcement. So stock was able to push through all of these technical resistance levels after forming a very long-term base. I view that as very constructive. So I am neutral to slightly bullish. How do I approach this trade? Well, I wanted to sell the $12.50 puts on FSLY, March 17th expiration, and you could have gotten 45 cents for those yesterday and even the day before. So, in essence, I am willing to take assignment on that. It would make me long the stock at $12.05 if I'm not able to buy the stock down there, which you can see that's almost $2.50 out of the money right now, or $2.50 away from the current price. If I'm not able to buy the stock down here on that major technical support level right in here, then I make a consolation prize of almost 20% in the course of 4-5 weeks. It's a really nice return. It's a type of strategy that I'm looking to employ right now, that and selling out of the money bullish put spreads. So we'll also be taking a look at some of those types of trades. Let's go and take a look at the market. A couple of other picks that I've had recently. Sono, we sold some puts on. We aren't going to know how these trades play out until March. And even if I'm assigned on the stock, that's okay. Sono was pulled back a little bit. BA, that was another stock that we had, and we were selling down below this 205 strike price, 205, 200 for $1 credit. That's in decent shape. So you can see that it's still holding this compression right here. So all the trades currently are in pretty decent shape, but yeah, we got to watch the market because we've had some market selling recently. And you can see that 2 days ago, we actually had a bearish trend day. Big gap down, gap and go, heavy selling pressure, very few retracements, meaning that there aren't really any bounces to speak of. You get one little attempt at a bounce here, so this is looking like a green candle, green candle, green candle, wham, finishes with a bearish hammer. Well, that sets the tone. It tells you, these long wicks tell you that sellers are pounding that bid down. Every time the market tries to poke its head up, they play whack-a-mole with it. So we get this nice bearish trend day, and then we close near the low of the day. This is a pattern that we've seen recently, typically after a very busy, big day in the market. What happens the next day? Well, we get a day of rest. So the market did a whole lot of nothing. It kind of ranged around, but it closed fairly close to the low, a little bit lower than the previous day. This would seemingly be a very bearish formation. So let's zoom out and take a look at the D1 chart and see if there's trouble brewing. And so we'll put up the major moving averages. The 50-day comes into play, so we'll focus on that. And the 100 and 200-day are below this. You can see yesterday the market tested that 50-day moving average and it bounced off of it. Well, okay. Apart from that, we've got some pretty decent selling in here. There's that bearish trend day, and you can see that we had this doji that closed down on the low of this long red bar. You would think that that's bearish, so you want to go back and check charts and see where else that pattern might have appeared. Long red bar, heavy selling, doji down around the low of that bar. Well, look, we bounced. Okay, so maybe it's not as bearish, but that's only one sample. Certainly, anything that I show you right now is not enough to draw conclusions off of. The only conclusion I would reach is that after a day like this, we don't necessarily have to expect a long red candle down. There would be no reason for me to take a short yesterday on the close based on this closing below that long red candle. So if we continue to go back, we can see another one here. Long red candle, heavy selling, little doji here, bearish. No, it actually paved the way for a bit of a bounce. Two long red candles. Doji, bearish? No, we got a little bit of a bounce in here. So when I go back and I look at these patterns, it gives me a feel for what has happened in the past. This is the type of curiosity that you should have. When you see this candle yesterday at the close, you should go, huh, we've had some selling off of a relative high and a doji that closes close to the low of the day or even below it. What has that done in the past? Has it produced? Is there anything that I can trade off of? So my conclusion is I wouldn't get too worried about it. Right now we still have support at the 50-day moving average because of my longer term bullish thesis. Am I particularly worried about this? No. I think the market's going to just chop around. Let's put up the other major moving averages here. Put up the 100-day, and we'll put up the, sorry about that, we'll put up the 200-day as well. So you can see all of them are coming into play right around this 389 to about 397 price level. And we also have this longer term uptrend line coming into play also. So a little bit of a pullback right now. Nothing to be overly concerned with. As someone who's neutral to slightly bullish, what do I want to see? I want to see it find support in here. I don't want to be taking out these support levels, certainly not with anything that looks like that. Long red candle, long red candle, long red candle, followed by red candles. No, this is a sign of heavy selling pressure. What I would prefer to see is a little bit of a pullback here and then a compression like this. As sellers will come in, they'll pound the market down, they'll see if they can get anything going. And when they can't and the market compresses in this general area, okay, well, now we're going to grind higher and see what we can do on the upside. That's kind of been what we've seen from the market. You rally up, oh, can't get any higher, we pull back, we rally up, can't get any higher, let's pull back, can't get anything going. So it's back and forth type of price action, and this is a longer term market base that has been forming. And there you can see inverse head and shoulders. A lot of chop, but this is the midway point around these major moving averages. We really haven't moved too much off of it. So I believe that the market is digesting news right now. It's waiting to see what happens with the economy. They know that the Fed is going to be hiking interest rates. They've been as hawkish as ever. That rhetoric has hit the market over the last few weeks. You would think that there would be some selling after that. The market's been able to tread water pretty well. That tells me that with all the inflation numbers and everything else, there's some longer term money that's being put to use. Does that mean that we can't see a nice big drop down below these moving averages down to this level? Sure we can. I have to adjust my thinking and my thesis if these major support levels fall with ease. So that would be these types of candles. Little peck, 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 tiny little candles. I'm not worried about that. That is a sign that there is support. We've seen a lot of two-sided action in the last few weeks after a heavy dose of news. And that tells me buyers and sellers are engaged, but they're fairly paired off. So it's a time to shift gears and do a little bit of more swing trading, and let's distance ourselves from the action, and let's let time premium decay work in our favor. But we've got to find those really nice, strong stocks. And what would I be looking for in particular? Well, we've got a market pullback here the last week or so, and a pretty substantial one. I want to see stocks that have broken out and that are able to hold that breakout. I don't care that they've pulled back to the breakout, but I want them to hold that level. Or I want to see stocks that have been able to grind a little bit higher. That tells me that there's institutional buying, that support should last. And even if the market pokes through here, those stocks should be able to tread water well. Gives me an extra line of defense. Time premium decay, I'm going to be out of the money. That's how I preserve that neutral to slightly bullish market opinion and still afford myself some room to be wrong, because I'm still expecting that there could be some market declines in here. What I am not expecting is for the rug to get pulled out. And if that happens and these support levels fail, then I have to lean on the support that I have for the stocks, and I've got to start buying in my short leg on those bullish put spreads and legging out of the position. When I sell naked puts on stocks, I'm not worried about the market at all. I will take possession of those stocks. I want to own SONO. I want to own FSLY. So let's see what we've got. Take a look at the market. We'll go back into that 5-minute view and see what's cooking here. Now we're starting to get a little bit of a pullback, and you can see that this candle right here, right now, I'm eating crow on my long position. So we are in the gap, and there's a chance that we will fill it. And I've got a half position on, so I'm not overly concerned about it. I do want to see this high from yesterday hold. It was tested, and now we're below it. And this was given back pretty easily. What got me bullish in here? Well, I saw that we were trying to fill that gap, and then we had this nice long key bar through the high of the day. Volume was pretty decent. I thought, okay, I'll take a shot here. I'll put a half a position on. We'll see what happens. I believe the market should be able to find support and go higher. And now you can see we've got these tails under body right here. That's a sign this support level is holding for now. I'm going to take these major moving averages off because we're just going to focus on the 5-minute chart right now. So let's get them out of the way. That cleans things up a bit. We do have a bearish 10p cross pending right here. That cross could tell us that we fill in this gap right in here. So, okay, that's a little bit bearish right now as well. So we'll keep an eye on that. As a bull, while I'm looking at stocks, what do I want to see happen right now? How do I want this day to set up? Well, what I'd like to see is this bearish cycle run. So you get the bearish 10p cross, 10p comes down, 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 but the market is stubborn and it's not filling in this gap. Tails under body, support, 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 and this entire cycle runs without much of any damage in the market. If I get that type of price action, that tells me that the next bullish cross like this, so we get a nice bullish cross down here, it's probably going to produce a pretty decent little rally. And this will be a sign that after some heavy selling 2 days ago and a little bit of selling yesterday, the buyers are willing to defend this gap higher. They're interested. They want to buy this dip. Sellers can't continue to keep things going on the downside. 50-day moving average. Okay, let's try the upside. We'll see what plays out here. Let's take a look and see if we can find some stocks that after this type of selling are actually holding their own. I had mentioned MOS, and I do like this. You can see these are our new trend lines. This is what we call a high minus trend line connecting these points. Earnings after the close yesterday above the 200-day moving average. I like this stock. It's a potash producer. You've got higher grain prices. That means farmers have more money to spend. They want to increase their yields. They need to buy fertilizer to do that. So I like this, and we'll take a look at that 5-minute chart. Yeah, I love this stock. So how would I play this? Well, we've got that breakout above the 200-day moving average. We have that breakout above the high minus trend line. And we can see that when the market is down, 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 what did the stock do? Preserved all of its gains, and it is moving higher, relative strength. So let's take a look at some options that we might want to trade. And this stock typically does not have great option implied volatility because it doesn't move around a lot. My first choice would be to sell an out of the money bullish put spread below the 100-day moving average because I can lean on that, and that gives me plenty of room for it to move. I've got that downward sloping trend line that should be preserved. I've got the 200-day moving average. I have the open from this long green candle, which was the earnings reaction, and I have the 100-day moving average. All of these levels of support increase my odds of success. And I also have a stock that looks pretty dang good. So we've got some nice horizontal support in here. Stock has been able to move higher during the recent market pullback the last few days. It's been able to hold its own. So this is one that I would like to look at. We'll put up the option screen and we'll see what, if anything, we can get for the March 17th options expiration, going down to that $49 strike price. And let's open that up. 49, maybe a 49.48. Well, I've got to be able to get 20 cents for this. You can see it's currently 11 cents bid, offered at 34 cents. Can I get 20 cents for it in the middle? Probably not. Might be worth a try. I certainly would not mind doing that spread. So that's one that I'm going to put out there. If the market continues to pull back, maybe the stock will pull back a little bit today. That's a spread that I really like. So let me repeat that. This is for the March 17th normal options expiration, symbol MOS. I like selling the 49 put. I like buying the 48 put, and I like doing this spread for a 20-cent credit. I have to put up $1, the difference between the strike prices less the credit received, which is 20 cents. $1 minus 20 cents is 80 cents. That's my margin requirement. That's my max risk. 20 cents divided by 80 cents is 25%. That's what I would make on this trade if it expires worthless. If by chance the market falls apart, if by chance that $49 price level, the 100-day moving average fails, then I need to buy that $49 put in and let the stock continue to fall, which it would be likely to do if that support level is breached, along with all these others. I don't see that as very likely at all. But if that were to happen, I would buy back the short leg, let the long leg run, and try and sell that long leg for what I paid for the short leg, and I would still get to keep my 20-cent credit if that were to happen. So what's an alternative to this? Well, I could, if I really like the stock, get a little bit more aggressive, and perhaps I would trade smaller size and I would look to buy some calls. If I were going to do that, I'd want to give myself plenty of time and maybe go out to the April expiration. Now, if I were going to do that, then I would want to buy something in the money. So perhaps with the stock at $52, maybe I'd be looking for a $45 call. Got plenty of time, and in this instance, they're trading at roughly $8. So I've got about $1 of time premium that I'm paying for this call, which is not too bad. And yes, I can sell some other calls against it and create a diagonal spread and take advantage of some time premium decay. I don't want to get too cute with this. If I like the stock, I could just buy the stock also. Options are simply a way for me to leverage that position. So yes, I would be nibbling on these and doing fairly small size. Pete, you're bullish on the stock. Why are you doing small size? Because I am neutral to slightly bullish on the market. If I were bullish on the market, I would be doing greater size. Your market forecast and your opinion of the market is what drives every trading decision. And so you need to look at that market forecast over various periods of time. It could be a short term period that I'm extremely confident in. It could be a 1 month period or a 6 month period that I'm really confident in. Wherever that confidence lies, that's how I have to structure my trades. And quite frankly, there are times when I could be longer term bullish and short term quite bearish. And so my longer term and shorter term positions might actually look quite different. But you trade based on what your market forecast is and what your confidence in that forecast is, and you size accordingly. So a lot of position sizing questions coming up. Everything goes back to your forecast and your confidence in it. Part of that is for the market. 65% of the puzzle, the trading puzzle, is the market. Then the next part of the puzzle is the stock. And that's going to be another big part of the puzzle because your confidence in your longer term opinion of the stock and your short term opinion of the stock is going to determine the option strategy. So that's how all the tumblers for the lock fit together. I will tell you, if you get the market right and you get the stock right, your odds of success go up dramatically. And you could use almost any option strategy that you want and be successful with it. So yes, I like MOS. That's the trade that I'm going to highlight. I'm not. I have to pick one. So I'm going to pick that 49.48 bullish put spread in March for a 20-cent credit. Might be doable. Got a little bit of a pullback in the market. I would like to see this stock preserve that 200-day moving average though. So if the market pulls back, we got to watch the stock today. I want the stock to close above that level. So I wouldn't be putting this trade in until maybe the last hour of trading because I want to make sure that these support levels are holding. If the stock head fakes through that resistance and then pulls back below it, well, then it's legitimate resistance. I don't want to do the trade then because it may not be able to break out. Let's see what else we've got going. And we'll take a look at some of the other stocks that are coming up on our searches. Nvidia, big earnings release yesterday. That is a beauty. Look at that, through two major trend lines. We'll zoom out a little bit and see where one of those comes into play. Right there and there. That is a nice breakout. Right there and there. So this is a high minus trend line. This is a high plus trend line. Beautiful breakout. Could Nvidia be a stock that I'm looking at to sell an out of the money bullish put spread? Yeah, actually, that's a pretty dang nice candidate. You can see how the stock has been able to preserve its gains when the market fell back. Let's take a look at some of these options and see if there's something that we can do here. Now the stock is a mover, so we should be able to get some decent option premiums for it, but I'd like to get down to this breakout, this $210 breakout. Well, that's about 27 points out of the money. So we'll go in and take a look at where the March regular expiration options are trading. I know I'm going to have to go out a little bit farther in time. So we're going to go and take a look at those 210, maybe a 210, 207.50. That would certainly work. In this case, we've got $2.50 between the strike prices. I'd like to be able to get 50 cents for this. Is that possible? Yeah, with the way this stock moves, it might be possible. So we would sell the 210 puts, buy the 207.50 puts. If the stock does not close below $210 between now and March expiration, I get to keep that credit and I don't have to worry about closing the trade down. So it is a very low maintenance type of strategy. That's what we want to do right now for our swing trades. You put it on, tick, tick, tick. Time premium decay is eating away at that stock. And the basis for that trade would be, hey, this stock has actually performed very, very well. Downward sloping trend line, breached up through that downward sloping trend line, post earnings, bullish flag formation through two major resistance levels as far as trend lines. We are staying at that high on the notion that this breakout is going to hold, but it would have to hold for the next 4 weeks for us to be able to do that trade and be successful in it. So I do like Nvidia. I think Nvidia is going to be a very popular stock to day trade in the chat room today. So I think a lot of traders will be on that one. Yeah, I like it. I love what I see right now on a day trading basis. So I would be loving this right now. Tails, tails, tails. So right now this pullback is holding. That prior low of the day is holding. We know that there's some buying in here. We know there's some selling in here. So very choppy price action. We want to see that support hold. We want to see this bearish 1OP cycle run without any damage, without getting into this gap. If that happens, we start feeling pretty good about it, and we feel that this bullish cross coming in here is going to fuel the stock higher. But this cycle is not over. It's got a long way to go. This could be a little bit in here, buy, 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 nothing real aggressive, and then whoosh, long red candle could come out of nowhere, just like these did. So we don't need to guess what's going to happen. We need to wait to see what's going to happen. If this entire bearish cycle runs and we get that bullish cross and we're still right here when all that happens, I'm going to be feeling good about where the market is. I'm going to be feeling pretty good about my S&P position, and I might add to it if I start to see us grind higher. But the advantage to what I teach and to what we do is that we have a much greater edge trading individual stocks. So if I start nibbling on the S&P and the bottom falls out, I'm going to lose money flat out. That's how it works. If instead of trading the S&P 500, I choose to trade Nvidia because it is strong relative to the market, it's going to hold its bid. And all you have to do is look at these candles here. If I felt like I did earlier, like this long green candle in the S&P 500 was go-go time, hey, we're off to the races. This is it. Market looks great. It's going to rebound after a couple days of selling. Gosh, I'm excited. If instead of buying S&P 500, I trade Nvidia, look, I didn't lose any money. That is a victory. And if I were right and the S&P moved higher, what do you think Nvidia would have done? Whoosh! This type of price action tells us. So stocks follow the market 75% of the time. When they don't, that's a sign that these buyers don't care about this market selling. They view it as an opportunity and they're continuing to bid for the stock. So even with all this market selling, buy, 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 as soon as the market starts to show any little sign of support, Nvidia is gone. Just watch it. I think I'm going to have to conclude this because I'm running a little bit long, but let's take a look and see if we can flip through this chart. And right now I'm just going through our heavy buying list and seeing what is popping up on that. PDD, TSM, a lot of these are bouncing from oversold areas. Oracle is a choppy stock, but this is pretty dang nice as well. It's getting through a minor little resistance area right here, long green candle closing on its high, not able to really get through resistance, but may set up well for a bullish put spread below this compression. So not too bad. AMD, just looking to see if I've got anything that is breaking out. There's a little bit of a bullish flag formation right here in AbbVie and above the 100-day moving average and a positive earnings reaction. There's your B before the open. Major moving averages coming into play right here. Let's remove this line right here. And you can see how it gaps up. It gets a little ahead of itself. Now it comes back and it tests the 200-day moving average. Market's been down the last few days. What has AbbVie done? Holding its own, moving a little higher. Definitely holding that 200-day moving average. Nice relative strength. Selling an out-of-the-money bullish put spread below that 200-day moving average. Yeah, that could certainly work. So you want to be watching to see what this stock does when you get this little market pullback in here. And you want to see if it's able to fill this gap. If not, and the market starts to grind higher, AbbVie could be another one of those stocks that you want to sell an out of the money bullish put spread on. I'm going to conclude it. I've given you some picks. We've taken a look at some of our new trend lines. They're really awesome. I'm going to do a video probably tomorrow where I do even more work with the trend lines, but I wanted to get one out today so you could kind of see what's happening with the market. And I'm just going to hang on to my half position right now. It looks like this gap is going to fill, so I'm going to eat a little bit of crow on that. Not overly concerned about it. And we'll see if I get a bounce in here somewhere. What I do not feel is going to happen today is I don't think this is going to turn into a bearish trend day. Why not? Well, because we've seen some buying recently here. Mixed overlapping candles, two-sided action. We've also seen some buying today. This is very choppy price action. Look, see the volume has dropped way off in here too. So could be kind of a dull, choppy day. Long tails in here. We've got a long candle erased by two subsequent red candles. So this is mixed price action. I don't think we're going anywhere very far or very fast today. I don't think the market's going to go very far, very fast on a daily basis either. So may not find support exactly here, but we've got some major moving averages as I showed you earlier down below. I think we're going to find some support in that area. So start lining up the stocks that you really like. Start looking for those strong stocks and start lining up some of those bullish put spreads if that support holds. This dip is going to provide you with a good opportunity to sell some of those. Thanks so much for watching. Please leave your comments. We'll see you tomorrow. I'm going to do a video tomorrow. We'll see you then. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.